Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about how to avoid capital gains tax, how to lower the amount of capital gains tax you might owe. So I'm going to get the video going and we'll go through this together. So capital gains tax is not due until you sell that asset and you file your tax return. So when you sell something, you don't automatically owe capital gains at that moment in time. You're going to owe capital gains tax if you had a profit whenever you file your tax return. So it doesn't matter. You have, January through April 15th to file that return, and you can extend it anytime in that period to pay the tax on that capital gains. So when you sell something, a car, anything like that, you don't have to submit tax any other way, but it's on your tax form. Okay, on your regular 1040 is where this capital gains tax is going to go. Capital gains is taxed based on short-term and long-term. Short-term is less than 1 year and long-term is 1 year or more. There's different tax rates based on if you follow short-term or long-term. Ways to lower the capital gains tax: you can gift stocks and bonds to adult children. And you can transfer. In regards to, you can transfer up to $11,000 per year each child. So it's a great way to save some money on capital gains tax. Other ways: you can provide personal financing when selling property. This will help you reduce the amount of capital gains tax by allowing that purchaser to pay you installments. This could be if you're selling a house, land contract, or selling a car, setting up installments, because that way the capital gains tax is going to be on those monthly installments. Okay, so that's how you're going to lower it. So if you have a house and it's land contract over 20 years, you're spreading that out rather than, this is like, you don't pay tax on your primary home, but if you have say a vacation home or something like that, when you sell that, if you sell that right away and a bank finances it, how it works is you're going to pay tax on that full amount. But if you provide the financing to someone else, then that gets spread out and your capital gains will get spread out. You can also execute, it's called a 1031 exchange. This is when you have a property swap. Since there's no income involved in the property, in the swap, there's no capital gains tax owed until the property you receive produces some kind of income. Then you have capital gains tax as a result. But property swap, 1031 exchange is a good way to avoid the capital gains tax. You can always give away property to charity as well. And this is beneficial for tax reasons and do a good thing. So, making donations of property is a good way as well. You can utilize capital losses in other years. How this works, this is really good, and a lot of people just don't take the time to do it, is you can take a $3,000 loss per year in capital gains. That's, for example, say you bought a stock for $10,000, enough stocks in a company, $10,000, and then you lost. You sold it for $5,000. Okay, now you have a $5,000 loss. What you can deduct $3,000, but now you have $2,000 left because $3,000 is the max. What you can do is take that $2,000 that you couldn't deduct and carry it back to another tax year and lower your taxes. And when you do that, you amend that return in the previous year, and then you're probably going to get more money back sent to you because of that. Or you can take that $2,000 that I was talking about and put it forward into a forward year where you're going to have a gain and offset that gain. You could take a capital gain in the future and take it down to 0 and then have no tax. So that's how that works. Schedule D is the form. It gets attached to your 1040 where you report all this. And I'll take you to that real quick. The stock price cost can be tricky, so I want you to be careful of this because you have stock splits, reverse splits. You have all that information that you have to have an accurate amount of what you paid for that stock. So finding the cost basis can be really hard sometimes if you had a lot of things going on in your stock. So that's something you may want to sit down with your investment advisor and figure out exactly what you paid for that stock, because you could have bought it at different times over a period of 10 years. And trying to figure out exactly what you paid for it can be tough. So you may want to take a look at that. Let me take you to Schedule D real quick. Here's our website first, harborfinancialonline.com. You can do a tax estimator. You can use this and get a really good prediction of what your taxes are going to be. And we have other links to more credits and deductions that are out there. And we actually do have a page that's solely dedicated to capital gains tax. So you may want to check this out. It has more on some of the areas that I've talked about. Short-term capital gains, you're taxed up to 35%. Long-term, you're in a lower bracket. So it can go all the way down to 0% right now, actually. So you have 5, 10, 15%, 0 through those ranges on long-term. So if you can keep the stock more than 1 year, I recommend that. And here's some of the other items I talked about. You could be taxed on this if you sell them. Stamps, antiques, coins, they're taxed at 28% unless you're in that long-term bracket. And we have a section here for the capital losses. I like to focus on the capital losses because it's something people usually don't take advantage of and they forget that they had a loss. So in that year you made some money, you need to go back and utilize some of those losses you may have not used, because it's really just money in your pocket if you spend the time doing it. Here's Schedule D, short-term, long-term. My other videos will cover this form a little more into detail, so I just want to show this to you. If you do the return online, it's automatically going to populate all these boxes for you. Fill out this page, and you can do that through our site, harborfinancialonline.com. If you have capital gains, it has all the tools in there to do an accurate report of your capital gains, your losses or your profits. So I recommend checking this out. And through here, like I said, you can click any of these links, prepare the return, do a quick estimate of what the estimate is completely free if you want to use that. And again, just be very careful on the cost price, because that's where 90% of the errors on capital gains tax happens, is right there. And if you were to get an audit, that's the first place they're going to look, okay? Because that is something that's just very hard to get the correct amount. If you have any questions about capital gains tax, send me an email, expert@harborfinancialonline.com. I have more videos on capital gains tax. Those should be able to answer your questions. I appreciate you watching the video, and check out our website, harborfinancialonline.com. Thank you.